Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets hidden in plain sight within company reports. Today, we're diving into Cantor Equity Partners VI Incorporated's latest filing, and let's just say this one is about kicking things off with a bang before we jump in. If you like getting these unfiltered looks at company financials, make sure you hit that subscribe button and don't forget to join our Discord community, linked right in the description below for even more exclusive content and discussion. So what we have here is a really interesting announcement from Cantor Equity Partners VI Incorporated. It's not a deep dive into quarterly performance, but rather the celebration of a major milestone. Think of it as a company's grand opening announcement to the public markets. The key date here is the 6th of February 2026. This is when the company officially went public. You know, for all those companies that are already private and then decide to sell shares to, well, everyone. This is Cantor Equity Partners VI Incorporated. They are based in the Cayman Islands, which is quite common for companies looking to tap into global markets. Now, what did they actually sell? They sold Class A ordinary shares. Now, ordinary shares is just a fancy term for regular stock that most people can buy. The par value of $0.0001 is a very small nominal amount, usually set for accounting purposes and not really reflective of the actual selling price. And the ticker symbol, the code you'd probably use to find this stock, is SEPs it trades on the Nasdaq Stock Market LLC, a major exchange which tells us they've met pretty high standards to list there. The main event is their initial public offering, or IPO. This is when a private company sells its shares to the public for the very first time. It is a huge step, typically marking a significant growth phase for a company. They sold a lot of shares, 11,500,000 of them to be exact. These are called public shares because they were offered to the general public, and they sold them at $10 per S-share. Doing the quick math, selling 11.5 million shares at $10 each brings in a massive $115 million in gross proceeds. That is the money they made before any costs or fees. Just a little detail here, they also included an over-allotment option. This is a common practice where the underwriters, the banks helping to sell the shares, can sell up to 15% more shares if there is a lot of demand. It looks like there was indeed a lot of demand because they fully exercised this option, selling an extra 1.5 million shares on top of the initial offering. But that is not all. At the same time as the public offering, they also had what is called a private placement. This means they sold shares directly to a specific buyer, in this case, the sponsor, Cantor EP Holdings V LLC. They sold them another 300,000 shares at the same price of $10 each, bringing in an additional $3 million. This is often done to bring in key investors, like the company's founders or major backers, at the same terms as the public. Now, this is a crucial piece of information for a company just starting its public life. The money raised from both the IPO and the private sale, a combined total of $118 million, wasn't just put into a regular company bank account. It was placed in a US-based trust account. This is very common for companies that are essentially shells or SPACs, special purpose acquisition companies, which is likely what Cantor Equity Partners VI is. This trust account is usually held until the company finds an actual business to acquire or merge with. It ensures that the money raised from investors is protected and used for its intended purpose. The trustee here is Continental Stock Transfer and Trust Company. They also mentioned that an audited balance sheet is available as Exhibit 99.1. This document would show exactly how the company's assets and liabilities look right after this massive influx of cash. It is essentially their financial snapshot on day one as a public entity. Under the exhibits section, we see confirmation of that audited balance sheet they mentioned. And sure enough, Exhibit 99.1 is the audited balance sheet as of the 6th of February 2026. This is where you'd see that $118 million in cash sitting there, ready for action. Exhibit 104 is the standard cover page data, which is basically a digital tag for the SEC that helps them categorize and process the filing. Finally, the report is signed by Jay Novak, the Chief Financial Officer. This confirms that the company's management has reviewed and approved the contents of this filing. So, what is the big picture here? Cantor Equity Partners VI Incorporated has successfully completed its IPO, raising a substantial amount of money. The fact that the funds are in a trust account strongly suggests they are a SPAC, meaning they are in the business of finding a target company to acquire or merge with. The success of their IPO, evidenced by the over-allotment option being fully exercised, indicates strong investor confidence at this initial stage. The company has taken all the right formal steps to announce its public debut. Looking at this report, the most important thing to understand is that this isn't a report about an existing operating business. It is about the launch of a vehicle designed to create an operating business through acquisition. The numbers we see are essentially the starting capital. The real story for investors will unfold as Cantor Equity Partners VI Incorporated identifies and merges with a target company. The $118 million raised is their war chest. The critical question will be how wisely they deploy this capital. Are they looking for a business in a growth industry? Do they understand the operational challenges of the sector they choose? The speed at which they find a suitable merger and the terms of that deal will be key indicators of their future success. For now, they've successfully navigated the IPO process. The strength of this is in setting up a well-capitalized entity backed by a reputable exchange. The weakness, and it is inherent to SPACs, is the uncertainty of the acquisition target. There is a risk that they might overpay for a target, merge with a company that doesn't perform as expected, or simply fail to find a suitable target within their mandated timeframe, which could lead to the dissolution of the company and the return of funds to shareholders. However, the initial strong reception in the market suggests a promising start, and the $10 per share price gives them a solid foundation. This filing marks the very beginning of Cantor Equity Partners VI Incorporated's journey as a public entity. The initial capital raised is significant, and the careful placement in a trust account shows a commitment to a structured acquisition process. The coming months will be vital as they scout for their future business. Alright, that is our breakdown of Cantor Equity Partners VI Incorporated's recent filing. What is your take on this IPO and the potential for SPACs to create successful public companies? Drop your thoughts in the comments below. If this deep dive into corporate filings was valuable, please hit that like button. It really helps us out. And if you want more of these unfiltered looks at the financial world, subscribe now. Don't forget to check out the Discord link in the description for more exclusive discussions. Thanks for watching, and we'll see you in the next one.